Hi, and welcome to our today's virtual home buying seminar. I'm Mary Hampton out of the Raveis Westport office, and I'm joined today by our Executive Loan Officer, Martha Witte. Hi, Martha. How are you?
Hi, Mary. Nice to be with you. Thank you.
So today, for all you home buyers, we want to take you through some of the myths that are stopping you from proceeding to buy a house, and we want to bust those myths. So let's get right into it. I want to share with you who is on the seminar today, Mary and Martha, and you'll be able to connect with us at the end of the seminar. This information will be there. So let's get right into it. We're going to talk about 7 myths about buying a home in today's market. And we're going to refer to the pandemic a little bit, but basically many of these are just general myths that there are about purchasing a home. So the first one, which is always on people's minds, is you must have 20% down to buy a house. So Martha, what do you think? This is in your wheelhouse as a mortgage lender.
Yeah, and I think that 20% down is kind of the number that people refer to because that's the threshold when private mortgage insurance is not required. But in fact, you can get loans even today with just 3% down. Of course, mortgage insurance would be required at that level, but it's not a prohibitive number. So it's a great time to consider getting in there, even if you think you have a lower down payment.
Great. Well, that's wonderful.
Now, and some people have asked, like, how long does that mortgage insurance last? And the short answer is that the equity in your home needs to get to 78% for the lender to have to automatically drop the mortgage insurance. So that might seem to take a while, but if you're making, your payments, you'll get there and there will be appreciation as well. One thing to mention though is on FHA, that mortgage insurance lasts for the life of the loan. So the only way to lose that type of mortgage insurance would be to refinance.
Okay, wonderful. So lots of alternatives.
Yes, there's lots of options right now, and even in the environment that we're in, the rates are terrific, even at those loan to values. So
great. I know
we're taking a look at
in a minute. And number 2 myth, you must have a perfect credit score.
Love that one. I think that's my favorite one.
Yeah.
Of course, great credit is better. Good credit is still okay. We have seen some of the lenders raise their credit score requirements, but you can still get a loan if you're somewhere in the 600s.
Good.
680 would be something to strive for. Of course, if you are looking for a jumbo loan, you're going to want to be above 700 or 720, but it certainly is worth not being afraid to see what that score is. And we can also make some suggestions as to how you might improve a score if it's not as perfect as you'd like it to be.
Yeah, that's why it's important to start early.
I think so, because there's some things with credit specifically that you can really get a nice bump in your score. One of those, for instance, is if you have credit cards and you tend to max them out because you have a low credit limit. But maybe the answer is to just use one card at the gas station so that you have a very low utilization. So ideally, just as a for instance, if you have $1,000 limit on a card and you typically spend $600 a month, that's 60% credit utilization. And you'd really want it to be closer to 30%. So if you're carrying some debt and you have the ability to pay down a little bit, you can get a nice bump in your score, because that one really surprises people a lot.
That's great information. Okay, we'll move on to number 3.
Oh, here we go.
Now is a bad time to buy a house. Well, I want to tell you that it's actually a fantastic time to buy a house. This is a chart of all sales, condos and single family homes sold the last 3 months of this year through the end of April, and comparing current year 2020 to 2019. And you'll see the sales are up slightly, 2.8% there. The average price is up, but we are suffering on inventory because we have seen a surge in the number of buyers out there. Look at the pending listings are up. New listings are down. So if you're a buyer, it is going to be a more competitive situation, which lends us to the fact that we definitely need you to have a certified pre-approval letter. And Martha can talk to that on how important that is in getting you the house when there's a competitive situation.
Absolutely. And it might surprise you right now to know that in the last week, purchase loan applications or mortgage applications have gone up by 11% just last week.
Wow.
And I just learned that today. But the other thing that might surprise you is that in the last month, those numbers have been going up and up. So buyers are ready to roll, and it's a competitive market. So Mary's referring to the certified pre-approval, and what that is let's get you ready, let's review the information, let's actually verify that the income is what we believe it is, the funds available for the transaction are what we need them to be, and that the credit is what we need it to be. And that's really a pre-underwritten certified pre-approval that really gives a seller a lot of reassurance that, wow, this is a loan that's really going to go through. So that's the real power of that.
Yeah, I feel with those certified approval letters, I feel confident that all they have to do is get an appraisal on the house, and the seller knows they are going to sell their house with this buyer, this strong, financially strong person. So I can't emphasize it enough.
I think that people are getting wise to that too, don't you, Mary?
They are, but I still every once in a while run into someone. I'm just going to get one off the computer. I'll just get a pre-approval letter off the computer, and that it's just not worth what it's written on, because it's all based on verbal stats and statistics that the buyer gives the Quicken Loans or whoever's on the other side, but it's not the same at all.
Well, and I'll give you a great example of that. A lot of times when you're doing kind of the digital mortgage, let's just say that you put in that you make $120,000, but let's say that $20,000 of that is a bonus. So, gosh, that digital pre-approval is saying you qualify on 120, but what happens if that $20,000 bonus, we typically take a 2-year average. Mm-hmm. And if that bonus is decreasing, maybe we can or maybe we can't use that bonus. And it just kind of depends. So you don't want to get into a position where you're just really not ready and it's not verified and you don't have that type of advice. Another good example is if you've recently gotten divorced and you have just started receiving alimony or child support. Typically, there needs to be a history of receipt of that. And so you can't just jump in without having kind of some of those facts and some of that education, really. Because the last thing you want to do when you start to buy is to get disappointed by something like that.
Exactly. If this is your dream home, we want to make sure that it goes through and you're happy. So,
yeah, completely agree.
Great. Also, I do want to share with you why we feel today during this pandemic is very different circumstances than the housing crash in 2008. The chart to the left with all these red bars shows, this is on a national basis, the annual home price appreciation, and everyone's home was just building an appreciation, and it was really sort of out of whack. And when things fell apart, which Martha will get into in a minute with the banks, it just, it came crashing down. Now we're in a very different position. These national numbers are higher than they are in Connecticut. We're probably in the 1% to 3% range of appreciation. If that, Fairfield County's probably not that rich, but it's just much more of a stable market, and the banks are stable. You want to touch on that?
Yeah, I mean, having started in this business right after 9/11, and then fast forwarding to 2008, it's just not the same at all. At that time, banks were really, those were the days of no income verification, negative amortization loans, all of those things that really, and the way that they were bundling up the mortgages. So banks were going out of business almost left and right, it felt like. It's a very stark contrast to today, where the underpinnings of the banks generally are solid. Yeah, we're all suffering a little bit, but banks are lending, as I mentioned. If they're still willing to go to 97% financing at competitive rates with decent credit, it's just not the same at all. Yes, we've seen some contraction with some of our lenders with specialty programs that had just kind of started coming back, like they're called asset depletion. Some of those are good for like self-employed people or bank statement programs. Some of those are temporarily suspended. Suspension is a lot different than out of business, right?
Yeah, totally.
Yeah.
So what we're saying is that it's a good, solid time, and you should not be scared with what's going on right now in the overall world. If you have a good job, you can buy a house and feel confident that it's a good purchase. Okay. Number 4, you should choose the lender with the lowest advertised interest rate.
Yeah, no. that we are all so empowered with information right now. And I like to kind of say that, technology or the internet, for, the sake of what's out there, first of all, it's not always accurate. Buyer beware. It's interesting to me that most of the time it's very standard practice for a lender, when they're advertising a rate, to publish that rate with some level of discount points involved. And discount points are basically an extra cost to you, the buyer, to get a lower rate. And it makes sense, right? I mean, if you're going to go into the market,
that little asterisk that nobody sees.
And nobody sees that. And it does translate, and we are required to publish an APR, an annual percentage rate, which if you look at the rate and the annual percentage rate, you can get a sense of if there are points involved, because the APR would be a little bit higher. So the closer the APR is to the rate, the less points that are involved. But the other thing that I would say is that it's not necessarily only about chasing the rate, because with many mortgages, the mortgage process is a process, and you really want to work with somebody that you trust, that can guide you through the process, that can also work with your agent to keep the process kind of moving along. And especially today, if you're chasing a rate that is the lowest rate, Mary, we said we weren't going to go there, but in some instances, if you're just with a lender, sometimes they are changing their credit requirements. They're changing a down payment requirement. I had a client call the other day and they said, gosh, we were getting ready to put 20% down, and our bank changed the terms to we have to put 30% down.
Wow.
Well, that's a lot of money. I mean, imagine that. All of a sudden, that's another, on a purchase of, $700,000, that's $70,000 you have to have extra. So Thankfully, I have lenders that will still do 90% up to $850,000. But that leads me to the other point, is if you're just single lender focused, you're subject to some of this turbulence that's happening. With Raveis Mortgage, we have about 30 different lenders that we work with. And as I said, yes, we have seen some suspensions, but we do have the ability to change directions or pivot, the word of the day sometimes for people.
Yeah.
But we do have that ability to go to another lender in the event that one of ours, pops up as surprise. Because when you get into the mortgage process, the thing that you really want to be assured of is that you're going to close. And again, I really feel like we have a suite of lenders that will accommodate that, and especially today.
That is so well said. And service is really, really important today. So wonderful. There's nothing, and getting prepared, as we've said, just getting yourself ready to go before we actually go house hunting.
And,
okay.
And you certainly want to have, you do want to have that assurance. You want that trusted person on the mortgage side that can say with very transparently, hey, I'm not 100% sure about this one, so let's go in this direction. It's very important today to be kind of assured that everything's going to go fine.
Right, and you're the professional. You can provide that service and knowledge. People just think that they can learn this all on the internet, and it really, really is important to have someone working with you to accomplish your goal of buying a house. So I can't stress that enough, to get going with a mortgage person that you trust.
And there's so much information out there right now that is, I had somebody get with me yesterday and they had kind of melded two concepts together. And so, and it had to do with, so the facts were kind of melded in not quite the right way. And so it's very important to have a person that you can ask questions to. I'm a big believer, go out there, look at the advertisements, call me and challenge me. Hey, Martha, is this the right thing? Because, we need to have that open dialogue. And I welcome the questions for sure, because I feel that my job is as much as being kind of an educator about the market and your process. So I welcome the questions for sure.
Yeah, there's nothing like having someone who has the experience and knowledge just to touch base and feel you are making the right decision. So the last thing any of us want is for buyers to buy a house and not really know what they got into. So
right, definitely.
Yeah. Okay, number 5, it's cheaper to buy a fixer-upper.
This is your favorite one, right, Mary?
Especially first-time home buyers, I'm always a little leery when they say, oh, let's go look at something that needs to be fixed up since we don't have a huge budget. We can do it over time. So I don't know. What do you think, Martha?
Well, and I think especially as a first-time buyer, it seems like you're going to get a bargain. Maybe you haven't saved up the down payment, but your cash flow is good. So you think, well, we can buy a fixer-upper. And maybe there's renovation financing that we can get of some kind. And the answer to that is yes, you probably can fix up your own house and you probably can get renovation financing. But one of the things that surprises people is that it's not all about DIY. Some of these programs have very specific requirements about licensed professionals, no family members can be involved. So I feel like this one sometimes, because it's kind of bargain focused, is a conversation that we have a lot, but I would say maybe not even in 10% of the cases do the fixer-uppers actually prevail.
Yeah, once all of the onion layers are peeled off, people realize this is not for me. I'm getting way over my head.
Well, and the other thing too is I think that, when you're buying this isn't really financing, this is more of just a thing, but if you're buying a home, you want to live in that home and you want to have fun in that home. You don't need to be working all the time on, something that really needs Is it a leaky window? Is it, we get some pretty good storms up here. You don't want to be in the middle of that. You want to live in the home, love the home, and have some fun in your community when we can all get back out there and do that. And that's starting to happen now.
Right. Okay.
And I'm a DIY person, so, I understand, but I didn't buy a fixer-upper. I'll tell you that right now.
Yeah. Especially a first-time home buyer, there's just so much in managing a home that they're not aware of, that they just need to get a very solid home, and then maybe over time they might, when they do a move up, that might be where they've been educated about how to maintain a home, they can take on more of a fixer-upper on the move up. But right out of the gate, I do not recommend it.
Well, and you bring up a very good point there about the maintenance factor. Isn't maintenance enough of fixing up? I mean, we're on kind of a treadmill and a schedule of how long is the roof going to last? What's the lasting of the windows? How about the paint on the outside and the inside?
Right, and just maintaining your heating and air conditioning system. So, there's enough on a first home buyer's plate right from the get-go of understanding how to take care of their house. So,
I agree.
Okay, let's go on to number 6.
We're busting through these myths, Mary. We're busting through them.
Good. Get rid of them all. So number 6, it's cheaper to rent than own. And I'm often asked this question. People are like, is it time? I've been renting for a while. I've saved up some money, but I'm really not sure. And there's no better time right now than to buy a house. Besides the low interest rates and the variety of lending options, you're just going to be starting to build equity. So here's some historic things versus renters versus buyers. I think we're sort of in there. Now it's just such a huge gap between renting and owning. So I highly recommend that we need to start looking at purchasing a home if you are a renter. Anything you want to add there?
Yeah, and I would just add, like you mentioned, rates are really at a historical low. So the buying power is much more significant. If you're at a rate in the 3s right now, that's something we, haven't seen in probably 60 years or so. And
right.
So,
right.
But if you,
Never
and so if you, sorry, go ahead.
Never seen those. I mean, the rates are crazy, crazy low.
They're ridiculous. And even just a bump of still a great rate in the 4s, well, we will now turn our nose up at it, but rate in the 4s is great, but depending upon your purchase price, you're going to lose a lot of buying power if those rates start to tick up. And we don't think that that's going to happen anytime soon. So there's no pressure there, but there is the pressure of, it's not going to go up in the next 5 weeks or maybe 6 weeks necessarily. It may bounce around a little, but if it does go up in the next year or so and you want to wait, you are going to erode your purchasing power. So I'm having a lot of conversations right now from renters who are looking to buy. And really, depending upon what you're spending in rent, we're able to match those payments, and you're building equity, as you mentioned.
Fantastic. Yeah, it's a no-brainer to me. So please think about it.
Agree.
Okay. Number 7, most people get out of college and they do have student loan debt. And they always think that maybe I need to continue to rent because I have so much student loan. But Martha, you have a different perspective. Thank you for educating us.
Well, I'm an optimist anyway, Mary, but the student loans, if you're paying them on time and there's no late payments, they can actually be a credit builder for you. So I think that that's point number 1. The other point that I wanted to make about this particular myth is that even if you have them in deferral and you're looking at them and they're all there and you're like, wow, that's really going to impact my ability to buy a home. If you have a balance of $6,700 on one and, $3,400 on another, we only have to calculate a payment on those of 1% of the balance. So if you have $100,000 in student debt, possible, that would be, what's that, 100? I don't know. So it's not going to be a terrible number to slow you down. So I wouldn't really let that hurt your or influence your chances. And again, if you have a worry, validate that with somebody, because just because you feel like that doesn't necessarily mean that that's really going to be a deal breaker for you.
Yeah, that's a really good point. I mean, this is why you have to go to a professional who's knowledge-based, whether getting a loan or buying a house. You'd have to use the professionals, because there's no one better for you to bounce off and get the right answer and get educated in the right way. So that's good. I did not know that. So you've educated me about student loan debt. So that's
yeah,
great.
I mean, I really do think that, when it comes to credit, and this is really where student loans, fall in, it's just like any piece of the credit report. You want to look at that credit, you want to make sure that it's accurate, but you don't need to, listen, we're all our own worst critic, aren't we? So talk to somebody, let them look at your credit. We can tell you what the influencers are and where we might be stopped a little bit. And then you have time, you still have the luxury of time to fix some of that stuff. So it's not a terrible thing. Just like credit card debt isn't a terrible thing either. Responsible use of credit is going to help you build a score, whether it's student debt, credit card debt, even car loan debt. The one thing I would say, if you are thinking of a purchase, is don't start trying to open up a lot more credit and do that type of thing. So
yeah, you have a list of do's and don'ts once you apply for a mortgage. So we'll make sure you get those.
Right. And I should probably correct my math, right? On my $100,000, that's really more like, $1,000. So,
right.
But if it's $10,000, it's really not gonna really hold you back that much. So,
all right. Well, those are the 7 myths, which we hope that you've realized they've been busted. And we did want to spend just a little bit of time on the fact that we realtors and mortgage people are essential. We are out showing houses. We do it very safely, take care of you. We make sure you have a mask and gloves and booties. We have our hand sanitizer. And the sellers have been very good about turning on the lights, opening all the doors, so to minimize how many things you actually touch, the doorknobs and counters and so forth. So business continues on. It is going well. And between the Zoom and the FaceTime, and Raveis is paperless, so we can write up offers over the computer, and you can digi-sign it. So there's no need to have we don't have to go to the office and do everything. So, and I know we have a great mortgage app as well. Martha, you want to touch on that?
I do, but first I just want to say what a great job you all are doing with regard to just keeping people, safe and really thinking thoughtfully through how to manage some of these showings. It's just been incredible over these last couple months to watch how progressive and how thoughtful you guys have been. For us on the mortgage side, we've been virtual for a long time. But we do have a mobile mortgage app that you can use on your phone to even upload documents, and an online application. Certainly you've got me on the other end, but all of our stuff has been paperless, and same thing, e-signing, and definitely keeping And I want to mention also, all of those things are super secure. You know, we've got multiple levels of security in there. And so that's important to note as well under the safety category.
Yeah, you know, business is continuing to be conducted and very safe. So I just wanted to make sure that everyone knew that. So I want to, oh, sorry about that. I want to thank you for joining us today. And I hope you'll reach out to me when you're ready to start to look for a house, and reach out to Martha to get that certified pre-approval and learn everything you need to know on your mortgage. So thank you very much. Thank you, Martha, for joining me. And we look forward to hearing from you.
This has been great, Mary. Thanks for having me. Really enjoyed it.
You're very welcome. Thank you. Very knowledgeable.
Thank you.